All right. Uh, Welcome to a new video. That sounded weird. The only reason why I sound like annoying right now is because I literally just made this video and it was an hour and a half long. Went to be done and edit the thing, realized that I recorded none of the fucking audio, bro. I literally did this video at 4 o'clock in the morning. And it pissed me off, so I had to jump back at 9 a.m. to do it again. Jesus. We're gonna hit the blunt first before we talk on anything important. All right, just because you can obviously tell how annoying that is for somebody like me. So, all right, let's get started with our fucking QQQ video finally. All right, number one, we're talking about power of three dealing ranges and how to use each of these PO, each of these PO3s correctly. Damn, this blunt tastes amazing. I'm smoking a chocolate backwoods today instead of dark stout. All right, now real quick, let's go full screen. All right. The first thing I wanted to start off with and make sure you understand. Every time we do one of these videos, it's not just a market review. We talk about how to narrate, how to understand market structure, along with your gold back levels. The reason why this is so important, bro, is my thing is you can come in and view the levels on any of these power three numbers, and without the proper context or the proper narration or understanding what the chart is doing from left to right, it doesn't matter what the fuck you're looking at. This is still going to feel insanely difficult to navigate. And my point is, again, in our first video talking about SPY, right? We talked about how stocks are different from NQ, YM, ES. When they go through some of these dealing ranges, right? And again, I want to pay attention to time here. All right. You see, I'm on a 4 hour chart. Bro, it's crazy. I literally just did this entire video. Anyway, so when you're looking at time, we're trying to figure out how long it takes for us to get through a whole 27. And let me remind you, it's perfect. This is not cents, but that's $27 in price. 3, 9, 27, 81. These are all giving you power of three. And right now I'm upshifted. So you can see exactly where price came from. And people are asking me like, well, my dealing range doesn't look like this. Like, it's down here. I'm not sure why it's looking different than yours. It's not. We talk about being able to shift the price or shift your dealing range rather, so that you can see where price came from. My problem is, and again, we're actually going to go through some more of these settings too as we're talking through this video. But long story short, we talked about the quick toggles at the top. You're going to be in this area a lot. You don't have to come in and like change any of these down here. The A&R source, all the look back, time zone, all this, you can keep the same. It's just that when you're looking to change something, and few different power 3 numbers, you're going to be moving through this menu a lot. Man. And so I'm gonna get over it at one point, right? We got plenty more videos to make, so we can't trip over one video getting fucked up. But the biggest thing that we're trying to talk about is your ability to keep control here. All right. We talked about how stocks are not moving through 243, 729, 2187 any fucking time soon. Yes, your indicator is going to shift down when you break this high. That way. There we go. It's going to shift down when it breaks this high down here. And now you're in this dealing range again. But the emphasis of me showing you the one above us, again, we're studying price. Okay. Now, really quick, I talked about time, right? Always type in price first. This is not going to mean shit until we have a starting time, so we can actually have a definitive start and stop point. So this is August, this is July. I want like the start of July. There we go. It's not the way. So this is why I wanted to show you this dealing range. And again, I want to start on the 27 and then come down to lower power of 3 numbers. This is what's so important. When you're looking at price from left to right and you're learning how to become a reliable narrator. We talked about the significance so far of your dealing range and your IPTA levels. All right. Your PD array levels, remember, it's all about repetition. So I'm going to give it to you a few times. Okay. When you're looking for a certain structure based on ICT concepts, you're going to find them only in the right levels. You're not going to randomly look for the liquidity void in any spot. You're not going to look for the breaker in any spot. You're not going to look for the fair value just anywhere. And I understand where you have imbalances in the market, but they might not be in a fair value level. More importantly than that, we talk about time here. All right. You can tell that like I'm really not like a YouTuber. Like unless I'm smoking a bunch of backwoods and talking to you guys like you're my friends, this doesn't feel like I'm just sitting here, mentoring and whatnot. I just like to come on here and like have fun talking about the chart really. And if you guys learn something from it, that's even better. But realistically, how we're looking at price here, this is why narration is important. I sectioned off all of July, and this is August here. And again, we're going to do, where August stops. So, cool. Tuesday, September 3rd. Yeah. Now, realistically, right? I said this before, but when you jump into a new dealing range, or not new, because we've been here before, when you jump into a dealing range and you have that Dr. Trap and retracement, right? you can come on and view the 27 and see your shared low and your shared high. You understand where the terminus probably is if you are a downside. If price wants to come down here and bounce off this high here, and this is what I really got to make clear to you, right? Remember how we talked about perspective? If I shift this up again, that same high is now a low. It's the same price. You're not going to get terrified or scared when the daily rate shifts on you. And I want you to understand, like we talked about, you need to look from left to right and have the narrative. Okay? So, really quick, obviously 4-hour chart so we can see pretty much everything. Why did we make a reaction up here? What is the function of EQ? Consolidation, isn't it? It came up to this 27 daily range. It cooked these highs in here, right? Now, this is what I'm talking about. Now, outside of the daily range itself, when you look at this, right, this is a clear turtle soup setup, obviously, right? If you're unclear about turtle soup, go watch my turtle soup video. We're going to make another updated one shortly. But a bigger idea, right? New month, you're in July. We took out this high here. Why does this work? Buy stops. You don't want to be a buyer above old highs. You don't be caught doing that. Even though you get a nice little run up here, what happens? You crash land. What's happening in here? And the problem is, even with the goldback levels, it's not going to help you until you learn how to narrate, until you understand market structure, like I said. So when you jump in this area here and you start breaking it down, do you see how price had a low, new day opening gap, and we have another new day opening gap here that were not mitigated or touched at all during the time of, what is that? And going into like the end of June into July, we were still not able to touch these areas here, right? Now, on top of that, when price gives you an old high, trades away from it, offers you new liquidity, trades up to take out buy stops. It's going to activate these buy stops because retailers think that this motherfucker is just a discount because it's been bullish as fuck. They just want to be a part of that. Okay. Not understanding that this is engineered for literally sells. So when this creates an old eye here, it makes buy side liquidity, sell side liquidity. It's going to jump up and make these relative equal highs, pop down one more time. There's going to be somebody down here who, again, understands the objective. So yes, you could buy down here and you prosper. But you have to understand the objective. Once you're above this old high, you need to be looking for sells. Unless you're already in here and your profit making is on the buy side, you're obviously going to have to look for some sort of area to take profit in here or a certain time. But the problem is, right? We talked about this. You don't have to be a stranger and know where price is going to react from. Okay, so you understand that this is a turtle soup setup, or maybe it's going to run and take these stops here. Once these buy stops are triggered, that's when smart money is loading up on sells. They load up on sells in here while you guys are in buys. All the liquidity on the buy side is taken already. There's no further objective. Doesn't even need the high here. hits EQ, and it reacts. But the problem is, we talked about what's open. Liquidity here, new day opening gaps. Prices are going to come in and fill in these new day opening gaps. You need to be mindful of structure. And look, it creates a gap to go through one. Takes these gaps out, no problem. That's where your understanding of structure. This is my point. When you're jumping down here, right? Watch. I'm so glad this blunt is fire because, bro, when I tell you, damn near 2-hour video got deleted or got my audio fucked up. Man. No, I will not stop complaining about it. But the funny part is, right? We talked about what price is really doing. Let's clean the screen up. So when we talk about, again, July, we take these buy stops or activate them. Retailer is now in a trade. They start to get fucked over. Now, again, you have imbalances in here. And when we jump down into this dealing range, look at the price. Yes, there's a gap here, but what? You're in a new dealing range, and you need to look at it that way. It's a brand new dealing range. You're not super concerned about what's above you because you saw the reaction from the previous dealing range. And I've talked about this before, where this is nothing but what we call a what? Motherfucker. Stop run. Jumps into this previous dealing range only to take liquidity, right? Flops right back into this 27, no problem. When it gets back down here, it has no issues holding this high here. Jumps down, failure to get above. Failure to get above. Now, I want to show you something. We talked about power of 3 liquidity. And to remind you, down to an hour chart. Now, what is PO3 liquidity? Now watch. We talked about, and this is you might have to rewind the video a few times on this part. We talked about the failure to reach a major GOLDBACH level. Okay. Now, do you see it on the downside? Every time price decides to make a swing point and change the direction, i.e. here, right? First of all, wide ass gaps is open. You have another gap here. But this is what I mean. Now pay attention. When price swings down here the first time, and let's get rid of this. When price swings down here the first time, specifically going from left to right, it fails to touch EQ here and reverses, okay? And it plops down, gaps, completes the partition. It goes up. We consolidate around this area, okay? We come up again, making a gap, sure, and it gets filled, but it goes up again, ultimately. But once it makes a swing point, goes down, and then back up again. This is now another failed move. Failure to reach even this GOLDBACH level doesn't have to be a major one. It could take the EQ, run up into this level, and fail to touch the one above it, or complete the partition. And again, we talked about this gap here. Gaps get filled. That's our point, right? 9 times out of 10, gaps get filled. I mean, we'll do a video on advanced gap theory, but listen, when you're looking at price here, left to right, it goes down, completes the partition, opens up a gap, leaves it open. Once we jump up here, this is wide open. So yes, you have all these movements down here. And again, what we talk about with the previous dealing range up here, it's the same concept. Stop run. All this down here only came to take liquidity, manipulate, make people feel uncomfortable, and jump right back into the same dealing range? Come on now. Come on. You have to understand what price is doing left to right. And again, I understand where if you're new to the concept, and again, what I want to do is go to the daily chart. Watch. When you go to a daily chart, it's actually not too hard because the 27 is big enough on stocks that it can support price like this. And where do we stop? And this is important. Where do we stop? Right in this area. Specifically down here, and we do another what? Stop run. Yeah. It just for a second breaks that DR to jump into this gap down here. See that? Let's use another color because that's annoying me. Like pink. Yeah. So you see how price jumps down, right? Performs a stop run, leaves a gap open, comes down, does all of this here because it wanted this gap that was wide open on the daily. Everything else is mitigated down here. You're focused on this area. So now we talk about time, right? Start of August. And I'm just doing this so we can organize ourselves, right? And we're here, September 3rd. Now, when you're viewing price, we talked about that turtle soup here. Oh, high gets taken out. And when you're in a sell move here, yes, we would have targeted the new day opening gap here, but at the same time, I want you to understand market structure. So in this area, when you jump down, and again, using a daily chart perspective, but we could come down and do it on any time frame. When you see price give you a turtle soup setup, and again, you understand liquidity is to your left, that's wide open. These have not been taken yet. These lows, all hanging open, right? And an old high was taken. Like I said, you don't want to be a buyer above this old high. You need to be a seller because liquidity is going to be attacked. And look at the consistency of the candles. That's important here. Low resistance liquidity run. Look how many blue candles compared to white ones in this area on your daily chart. You don't even get a nice run until you meet the objective. And again, we talked about your dealing range. It's going to complete and fully give a stop run, take liquidity before a up run is even slightly thought of. It has to complete the objective. Now watch. Let's bring this down, okay? So we're talking about the 27 so far, but I also mentioned that the 9 is important. How does this play out? Now let's bring it down to our 15. Now watch. I want you to understand how fractal this really is. And people always come to me and they say, yo, well, I have trouble organizing myself through the levels Like, where or how do I participate? And the reason why we're on a 15-minute chart, and I actually have this little silly indicator I keep mentioning, right? Understand the time, right? The days. So this is current price action from this week, right? Let's talk about it. And one second, let me get the vitamin water. Oh. Hmm. And again, ooh, I love vitamin water. Tastes so good. In this area, bro, I want you to feel so comfortable with your trading style. You being on the 9 or the 3, using the 27 as a wireframe as to, you know, complete tops and bottoms as to where it might go, that's what keeps you in line with the levels. For example, now one more time before I drill it into your head a certain way. If math here being used is 3 times 3 equals 9 times 3 equals 27. Okay, whatever. You got to think about it like this. That means if I have a 9, another dealing range underneath me, and I have another dealing range underneath that, and all these are 9s, all right? Put it that way. 9 times 3 is what? 27, obviously. When you're looking at a 27 dealing range, right? If you understand that price is bullish or bearish, let's say in this example it's bearish, right? When price is going through your dealing range, let's say it starts and it goes down. Let's say it goes to the high of your dealing range. You might have a 9 and a 27 share a high. So it's going to come up. It's going to start doing its thing, right? Boom, maybe there's a fair value gap in here. And then it's going to hit a liquidity void and do some other stupid shit, right? Whatever. And ultimately completes the dealing range. But when you're looking at the 27 like that, a lot of people will feel scared to take the trade because they missed the 27 when it was like in this area, right? And I'll change colors. They might have missed it in that area. Jesus, can we actually get a thank you? All right. So it might have been in this area, and they felt as though, yo, I was just stalking the 27. I didn't see anything after the entry, and I felt uncomfortable. I didn't know if it was going to come back to, I'll do it like this. Let's say that's EQ, right? But the problem is price is fractal. So if it's going to make a similar move, right? And you're viewing how price goes, doing the same, well, not the same, but if you're viewing the 9 and it's just prying through the 9s, you understanding that the 27 is your wireframe, you're not going to be scared and confused every time a 9 completes a dealing range. You're not going to look for retracement every single time it just completes one of these. You're not going to take profit yet. You know the 27 is what we call your wireframe. I love that word. And again, This is how I see the concept, the market. If you don't like it, don't care. And my thing is, when you're looking at a 9 versus a 27, right? What's stopping you if you know that the 27 is going to complete from taking an entry in here, right? A very good one. When price starts going your way, yes, you can pyramid when you get to another change into another dealing range. You can actually pyramid again uh on the way down, knowing it's going to get to your terminus, right? Which is ultimately like the 27's low. But this is the thing I want to get you comfortable with. Do you ever see how, like, on here, right? I have a bunch of highs and lows, and they're in, obviously, I can see the prices. You're going to see a lot of times and a bunch of ideas and charts that we look at here. It'll often give, now I'll do it in yellow because it pops in yellow here, actually. It actually gives you what we call either shared highs or shared lows. And this is what I mean about a wireframe. The 9 and the 27 will have the same high, yet you're going to come in, and however you feel like you find your bias in a way that's comfortable for you. My bad, let me hit the blunt real quick. However you like to find your bias, it might just be looking at the premium versus the discount of a a nice dealing range, or it could be weekly profile, it could be a certain PD array. However you used to get bias for that day, that session, that week, whatever, right? If you know that the 27 is your main dealing range you're looking forward to complete, you could come in and dominate these nines, bro. You can dominate these. Now, we know that the 27 completes itself. We know that. Now watch, right? When we upshift this one more time, all right? So this is 3. See, I DR shifted it 3 times, all right? Look at how price behaves, all right? Now, you can come over there and look at that drawing, rewind the video, but watch. Monday. Now, bank holiday on Monday here, so we open on Tuesday. Look at how this works. Your 9 is beautiful here. When you pop into a new week, I don't trade Mondays anyway. I'm starting on Tuesday. So when I see price rejecting this high here, and Tuesday typically creates high low of the week, right? If not Monday. So we can change color here. It's blending in too much with this Wednesday. All right. Now here we have price. Failure to get back above this high here. And we do it again here. Now let's break it down. Now we understand dealing range is complete, right? So we talked about when we open here, we created power of 3 liquidity. We retrace. Power 3 liquidity, we retrace back to the high. This right here is A plus setup. You understand liquidity is already engineered below you. This is already a Monday high that has already been taken out into a fair value gap. Failure to touch EXT, so you know that you're fully in a premium. So when it starts to drill down, you need to be a part of that. You have liquidity here, and the partition that you know needs to complete. It's a $9 move on QQQ. That's amazing. That's a lot of money, man. Look at this. A plus setup. And again, what do we talk about? A, M, D, X. The cycle is perfect. So when you're looking at Monday and you're trying to break down the price action, Then you can come in and forecast the expected price action. Okay, so manipulation is tomorrow. It's going to be some wild shit. And what does manipulation look like? Looks like a V or a W, or it could look like an M or an upside down V, or it takes out one side of liquidity or takes out both sides of liquidity, how it does on the Monday, right? It opens, takes out the low, then the high. And then the same day, you create that high again, and then you get your distribution on your Wednesday. Clean, isn't it? That's why I trade Tuesdays if you understand how to trade manipulation. But I will tell you guys, if you're new, wait for distribution. Wait for it. Trade majority Wednesdays and Thursdays. Not saying to not trade on Tuesday at all. I mean, you can get in there and find a good move for sure. But if you want to understand and be more comfortable in your trading, if you're more comfortable with a certain type of price action, you can come in and wait for that. AMDX. Friday is a measure of retracement. Notice how your Thursday was downside. What does Friday do? You go up, down, and up again. It's a measure of retracement. We'll talk more about Fridays, but I want you to focus on Monday through Thursday. AMDX. But outside of the week, 'cause this is annoying as shit. Hold on, watch this. I forgot to light the blunt. There we go. There we go. We got the blunt lit. I like the chocolate backwoods. They're not like annoying as I thought they would be on flavor, but I'm not like too into like flavored blunts. That's why I get like dark stouts a lot. But me personally, when you're looking at charts like this, you understand the assignment. And again, look at what we talked about with power through liquidity. And what do we talk about the chart does all the time? It goes from premium to discount, premium, discount, premium, discount. That's all it does. Back and forth. Plays ping pong. Premium to discount. Now, in this area, let's get specific. All right. How do you participate in this? How do you get here? Now, we can already come in and we talked about our first entry being on these highs here. So you could take a trade here, pyramid here, if you feel comfortable. Now, this is your Tuesday, right? Wednesday, and you complete the partition by 2 o'clock. You're taking profits here because we're expecting some sort of reaction. If it doesn't go right down, you know you might want to take profits right on this low because the move is done. Smart money has moved their money from point A to point B and has no other objective in this area at the moment. And again, this is the distribution cycle. So when this is over, it's going to complete a level and be done. And it told you exactly where price is going to go. So it's not confusing when people say, yo, is price bullish or bearish? I thought we were downside. Yeah, but you're not paying attention. If you're stuck on the 27 and the 9 retraces on you, you're not going to be super confused because you saw the 9. You're like, yo, hold on. Well, we had a reaction here. If it takes out PL3 liquidity and you have another run to this high, which is not known to be an impossible move. It can play support and resistance off the same dealing range for a while. It can. Do not get confused about that. It can play support and resistance here. That's what's so cool about it. And again, we talked about the occasional, well, not occasional, but it does this a lot, but the stop run. So when it jams this downward and breaks it, you need to be still looking for reactions and waiting. If this is really going to break this and go down like this here, or is it going to react here and go back up again? That's what you need to watch for. But again, look at time. Time plays the biggest role. This is a whole nother day. So when you're done Wednesday, be done. So at the end, 2:45, and you retrace, you're already done here. But you can watch. So when you wake up the next morning and you go and consolidate here again, you already understand the plan. You can sell that thing right back down. Right back down. Do you see what I'm saying? Right? The biggest thing is, what else? I like the buddy guy. The biggest thing, right? Now, mind you, we've done a lot of work talking about narration only from left to right and here. Again, when we're switching dealing ranges, right? Look at the vibe. And peep how I said it. I said vibe. All right. When you jump into this area, everyone gets fucking scared as shit and they want to say, damn, well, you know, normally when price opens up like this and price starts running, people get scared to take this trade, right? Because what do they think? They think, oh, this is going to randomly retrace at any point. See what I mean? Now, in reality, we understand from an algorithmic perspective, the algorithm does not do two things at once. If the objective is lower, it's going to get there. It might give you a few small retracements on the way, but that does not change the objective. And now that you're able to see what price is doing in here, now I'm a market structure expert. Fucking with me, you're going to be an expert too. Okay? And again, I want to remind you, we talked about some of these labels. We talked about how if you're trying to use PD arrays or you're looking to understand price action more about what it's doing, you need to understand structure. So go and study order blocks, study fair value gaps and how they work and how they look and how they function. We're talking about where they're formed, how to use them, right? We talked about liquidity voids, where they're formed, what they look like, how they function. Now, you have to understand, I've been talking mostly about areas that we like to participate from on purpose. So that EXT, that low, the rejection block, order block, fair value, and liquidity void area. These are all standard or basic, I'll say, levels of participation. These are all easy. Once you get the hang of it, these are all easy to use even if you're a beginner, okay? This is a big thing here. The more that we talk on this channel and you guys get comfortable, we'll talk more about how to participate from the equilibrium or the middle of the partition. You have your breaker, mitigation block, and then you have your premium mitigation block breaker, right? And so these areas here can be really complex for uh, even seasoned ICT traders. You might have thought your theory on breakers was correct the first time. Oh my God. When I had to like rethink like how PD arrays like really work and puzzle their way into dealing ranges the way they do, it's incredible. And really quick, I'm trying to get you to understand, and that's why I want a 5 minute chart now, right? 5 minute chart. We're now in a new 9, and we understand that there's one more underneath us. So we only have 2 more dealing ranges to narrate. Now, this is where the fun comes in. I said before, if people felt like this is a random run, they can't get in, and there's nothing to do to get in here, you are severely, severely wrong. That's why coming down to a low as shit PO3 goes nuts on lower time frame. Watch this. Now, we talked about what? Now, my favorites. Let's make this easy first. Fair value gap, right? Where is it found? So far, you know my dealing range now. You don't have an excuse. If you see my videos, you already know. My fair value gap level is always going to be blue like that, whether it's premium or discount. And so I take a lot of fair value gaps, you know, and I want them to stand out just like that. So I'm on a 5 minute chart. So we annotate, right? And get used to annotating time frame specific, how I told you before. So this is a 5 minute fair value gap. All right. Now let's get creative in this area though. All right. I talked about this before where a lot of times I'm participating not even from the 5 minute. Like I'll see an imbalance like that or right there, and I'll go down and try to find me an even more refined one. And this is what I mean. People say, yo, I don't know what fair value gap is what. Like, I don't know what to pay attention to. And there's 30 million of these things in the marketplace, right? I showed you where to find it. Not anyone, but the one that works. And again, remember the context. We're in a premium. So you're already looking for sales. You're already eliminating one side of the marketplace. You have to learn to do that. Learn how to eliminate one side of the marketplace based on logic. Fair value level. Fair value gap is created on the sell side. Okay, this is your 5 minute one we talked about. But your 3 minute, right, is the same thing. It's super clean. So I'd rather take this based on the 3 minute point of view or perspective. But then again, you also have what? Be creative. Fair value gap. It's coming out of the fair value level. I told you before, these don't have to be all jam packed into this one area. It can be, and these are the ones I really like because they're perfect. But you can come down here and get another perfect fair value gap like that. And look, just so you can see it, right? Yes, it is a perfect fair value gap. You get a perfect rebalance here. And really quick, I just want to, just because I can't ignore it. So right here is 12:15. This is 12:18's candle. So obviously this is like, 12, 15, 16, and 17. And then this is 18, 19, or, whatever, to 21. So for those who are understanding like the, 12, 15, 16, 17, 18 situation here, if you know, you know, right? All I want to say is time and price. All right. So I'm not going to do that lecture on gold back time, but if you know, you know. Okay. If you can look back on something I might have hinted on before, you might be able to figure out what I just said. But just know that if you're used to finding fair value gaps, what they look like and how they function, you should have no problem taking either one of these. All right. We're talking also about the liquidity void. Remember, my liquidity void is right after my fair value gap level. So are we surprised that the price does this shit right here? And again, you're already looking for reactions from EQ, so you're not surprised that it gets a little bit, kind of funky down here. All right. Now, real quick, I talked about something just now. I talked about the middle of the partition, and a lot of people, again, right, when we talk about the breaker, mitigation block, things like that, let me school you real quick. All right. Now, we understand with a lot of parts of these lectures, we talk about the fair value gap, liquidity void, and we're going to actually do a whole series on the order block. So don't worry about that. We're going to do a whole series on order blocks. hmm But this is what I need you to understand. Breakers and mitigation block, people have trouble with that a lot because they look similar. They have completely, like, they are really different, but they are similar. They play into each other a lot into the puzzle. What I mean by that, when you're looking at a breaker comes down, it's going to make a little low. It's going to retrace a little bit. It's going to stop. It's going to come down and it's going to break this low. All right. Now it's going to do some other dumbass shit in here and whatever, but ultimately it's going to stop. And once it starts trading up again, this point that was left open here, or it was rather closed, but it's going to trade back into the same level and cause a reaction and go lower. Now, the highlight of this, and this looks like whatever at this point, right? Looks like nonsense. But 9 times out of 10, when you're looking at a breaker, you need to start being able to see what the breaker's actually referencing. People can't see these a lot because they don't know how to draw it out in their mind. And I tell the story all the time that like I was so hell bent years ago to learn this shit, bro, that like I was up with my friends at parties at like literally going to raves and shit at 3 o'clock in the morning on my phone in the middle of a mosh pit trying to find what the fuck I can find in the chart for that looks like a breaker. I couldn't get this shit off my mind, bro. It was so hard to do. Breakers and mitigation blocks would fuck me up in the marketplace. And I'm like, bro, I'm at a party right now, bro. I don't have time to slack. I do not have time to slack. I need to find fucking breakers in the marketplace. I could not sleep at night until I got this down. This is what I mean. It's going to come down, go up again, and break that low. It leaves it open, but when we trade back to it, it creates this little point here that you can ultimately sell from. And again, I'm going to annotate, this is your breaker. If it was a bearish breaker, because again, we've been looking at sell side price action, and we're going to be looking at more sell side price action until about another month or two, if I'm honest. So bearish breaker. All right. Now, again, we talk about the mitigation block. How the fuck is this different from this? Now, mitigation block is a tricky one. It's actually really simple once you get into it, and people overthink it. But it's difficult at first because in your mind, you're like, yo, but like, what the fuck? I don't really understand. It just looks like a motherfucking zigzag. Doesn't look any different than this, honestly. But when you're looking at a mitigation block, what's going to happen is you're going to have a definitive point, and it's going to drop down. Now, there's going to be a set of candles in here. It's going to drop down. It's going to go up until this last up or down close candle. And it's going to drop. It's going to go do the same thing here with another up or down close candle and drop. It's going to do the same thing a third time normally, typically 2 to 3 times, but normally 3. We talk about 3 a lot in the marketplace, don't we? And down again. But what's funny is, again, it looks completely the same. But how you highlight it, right? And what makes the difference here is what I just said it out loud. Price is trading into, again, not into a low point. It's trading into down closed candles here. This might be an actual wick, is what we're looking for here. Price is going to produce a nice wick, and it's going to trade right into a wick, or a nice bodied candle with a wick on the bottom. And we're going to trade parallel into it and react from it. This is trading into whole bodies. And it's reacting from that every single time. You know what I mean? It's doing it just like this. And the reason why I'm talking about this right now is because you need to understand if you're trying to come in and operate dealing ranges, right? I said this earlier. Price does not do 2 things at once. If you're bearish, you're bearish. If you're bullish, you're bullish. And you need to understand how price achieves going from high to low. Now, we talk about breakers and mitigation blocks and whatnot. Look at this. We've already explored the fair value gap. We've already explored the obvious liquidity void, which is this long, insane price swing, right? Starting from exactly here. Let's put on our liquidity void level, right? That's liquidity void. So we're going to annotate that. So we can come in and say what, LV? Nah, bro. These videos are not going to be short. I don't give a fuck because this is for the people, real people who really want to learn this shit. I do this for y'all. Like, there's a reason why like I have a paid Discord. There's a reason why I have free content on YouTube. Is because, in my bad, I'm using my hands real quick. Got to roll another blunt, right? Um, damn. We got to roll another blunt. All right. So this is the thing. These videos are not short. We're going to come in and really do some good work here. I could come in and do this all fucking day. Not for me, but so you guys can understand that there's so much that goes into trading or your development in trading that it's not the type of work that you're looking to cut corners. That's why these lectures are complete. That's why I speak a certain way. That's why I use repetition and I mentor a certain way. That's why I double back with my students when they feel like they don't understand something. This stuff is hard in reality. The only reason why I've gotten this good is, again, 12 hours a day for years. 10 to 12 hours a day for years. And I always do this little motivational part because this is important. We talk about liquidity void. We talk about fair value gaps and how those were able to be achieved there. But again, let's break this down. Now, right after my liquidity void, I have my breaker. Yeah, let's talk about it. Now, what did I talk about just now, right? I gave you a structure. I told you something. I told you how PD arrays are like puzzle pieces. They are algorithmic puzzle pieces that form based on math. Algorithmically, these have to form a certain way. That's why the dealing range is given to you a certain order. High, rejection block, order block, fair value gap, liquidity void. And price is given to you that way when it's delivered. We talked about the fair value gap. I just want to throw that in there. Now, when we talk about this, right? This is one of the most powerful things in the marketplace. And shout out Peasy because he told me like he would be like the closest thing. I never had a real mentor, but like he sat me down on maybe like one or two sessions and was like, yo, like you should probably sit down and like really learn ICT, bro. Like he's the one that kind of motivated me to get more into ICT. And I had kind of heard of ICT at the time, but I didn't really like sit down all the way and do what I'm doing now. You know what I mean? So that's why I always give people their credit, their flowers, who brought me through anything that I'm doing right now. You're going to be thanked on this channel. All right. And so again, shout out my students too, because they are phenomenal. I love you guys. And like we do such good work in the Discord. I've seen people have $10,000 days, $3,000 days, $5,000 days, $70,000 months. And some of the things that we do here are so incredible because it's not very difficult. The thing that makes it difficult is the lack of information. So when you're trying to figure out, yo, how do breakers work? I can't find a fucking breaker anywhere. That's because, again, we talk about PD array in the right GOLDBACH levels. So when you see how we call this the breaker fair value gap combo, fair value gap is here, we see that. And what did I say about the breaker? It drops down, right? You see how it tags my breaker level and it stops. Oh, that's strange. It goes up into my fair value gap, does its thing, drops down again. And what does it do? Like I said just now on our drawing, it drops down and it breaks that low, right? Now, I talked about that fair value gap here again for a reason. Now you see why. We reference that fair value gap again, and we drop again lower. But when we drop down, we stop. We retrace randomly, right? Not randomly at all. Where do we stop again? You feel me? And write down. Now, just so you understand what I did there, right? That's why I say I take this area, you can draw it out. Now, you can use like these candles here. You can use the first wicks here. You can use this wick here. But realistically, when price drops down the way it does, and follow me, let's do it one more time. Watch. We drop down, we make the breakers low. We pop up, and we take out that low. When we pop up again, we pop right into that same area and fucking dump. My guy, is that not what I just drew? You feel me? And again, 3-minute chart. It's not taking very long. That's how a breaker works. And again, you want to know what's funny? Watch this. I'm telling you, get creative. All right? You can easily get creative here. Watch. Even if you didn't see it the way I just saw it. What is this? Low. You pop up. You take out that low with this little candle here, that price swing. What does it do for just a second? Pop back up right into that low. Bearish breaker. And where do you sell it from? Because you're focused here. See that? Bearish breaker. Is it not? It does exactly what I said. Goes down, up, breaks that low, comes back just for a second, and you sell it right here. Now, how do you know that's a real breaker, though? What do you mean? You're in a breaker level. I'm already expecting it. That's how you have to come in and learn how to navigate price. Learn what the PD arrays look like. Learn how they function. And we're going to do that right on this channel. Oh, but Jay, you didn't talk about the mitigation block. Shut the fuck up. I'm getting there. Told you I was busy with my hands, right? All right. Now, watch this. Last thing. Where's your mitigation block? Here. Now I'm talking about the premium one, right? So here. All right. It's a smaller box. So we're focused here. All right. Now, you want to know something about the mitigation block? Like I said, it's nothing but a step ladder. So, when you're looking at a step ladder, what do you think it's going to look like? Watch this. Now, there's that one there, but I'm going to show you a better one. Watch this. Let's go down one. Now, last dealing range. Okay. Now, in this area, right, the last one had a really, really nice breaker, and I want to show you exactly why we talk about the mitigation block. So, again, 2-minute chart. We're not trying to come down too far. I mean, I can come down to a 1 minute. I mean, I'm typically going to 1 minute, but watch. So, we're looking at the smaller level. All right. Now, really quick, you see how right here is what we just talked about. It's the same thing. I can move down dealing ranges to show you the same thing. We're focused on this level here. All right. But now watch. This is your breaker level, and you see another breaker. Okay, watch. But the mitigation block, more importantly, when we hit this level here, all right, see how we step into our mitigation block and it does funky shit? It starts here. It's going to go up for a second. And what did I just talk about? Trades into a down close candle. And it drops. What does it do again? Right from here, trades into a down close candle and it drops. And from there, guess what it does again? Because you know why? It goes through another mitigation block right next to it. So these levels are really, really close together, right? See that? Now, the problem is, this is not going to randomly motherfucking stop when the level is over. All right. So that's what you have to understand. So when we see that phenomenon here, and what did I say? Look, all it's doing is the same way a breaker formed, it's just a slightly different, right? And you might think about the fair value gap, but I'm thinking about the mitigation block. It's trading into those last down close candles. Goes down, up, down, up, down. And again, when you get to a lower time, lower part of the dealing range, right? Does it again. Right here. Watch. Down, up, you go down, up, down, up, and then down. See what I mean? It does it 2, 3, normally 3 times. And look at that. It goes right through your liquidity void area here. Right? That's your liquidity void. Let's finish this up. Now, where's your breaker at? Big ass level right here. Why do you think you see it the way you see it? We're on a 1-minute chart. So when you see something like this, right? What happens? This right here is a bigger situation attached to this, causing you to make a breaker. So when you're in this area, watch. Ready? Let's highlight it so we don't lose it. All right. So right here. Now watch. Back to our 2-minute. What did I talk about? Breaker. Look at this. Goes down. Stops for a second. Takes out the low. Remember, it'll do that. And again, it's so extreme sometimes, you need to pay attention. Look, it power 3 liquidity does not even touch the low. Trades back where? Right to your breaker candle. Why would it do that? Breaker. And you shoot downward. Come on, bro. You have to understand market structure. I'm showing you algorithmically where these things are formed and different variables and ways it'll do it. It's not very difficult, but you have to open your eyes. And the only thing we've talked on so far is, again, 27, the 9 dealing range. So all of this, again, is not outside of the realm of just switching your dealing range real quick. Understanding where price is going to do what it's going to do. You can take any one of these structures as long as you're understanding of what it looks like and how it functions. Do you see what I mean here? Look how perfect my 9s were all the way down. And again, if we go current and we go 27, let's look at that again. Right? Or my bad, let's go 1 because we were up 1. Yep. Do you see what I mean? You're not confused on where price is going. So if the whole time, let's mark that real quick. Let's mark the 9 high that we saw, right? So it was what? Like 2 or 3 up, I think. Yeah. So this 3, this was right where price had that perfect run here, right? So that was the 9 high. So remember that real quick. All right, so 9 high, we're going to mark that. And we're going to go view the 27 again. So 27, now come up, we're going to make this 0, and then boom. Or my bad, I'm proud. Literally. So, all right. And here, let's go hour chart. Now look. Oh, what's funny about that? Highlight this. So if this was this is how you keep track, right? This was the high there that we could have sold from, knowing that's the 9's high. All right. Now, look at this. Price is already coming down through this dealing range. All right. We know the terminus is underneath us on the 27 because it's our wireframe. All right. There's also a gap down here that we could be aiming at. And ultimately price fills that in, no problem. And again, if you looked at the nines all the way through, it would look different. So you could see that this is an actual target that you can get to, no problem. Now, if you're viewing the 27, you would probably get a little scared about this. This is the last part of our narrative, okay? I talked about this little thing up here not being taken yet. I saved it for last. To us, yes, it's PO3 liquidity, right? There to touch the high. So when we get back down here, a lot of people would be looking for a price action to just fill this gap back in, right? And it never does that. They never take the trade because they get scared of that alone. But the problem is, I keep saying it, you understand structure or you don't. Do you see how in this area, how many times we didn't wreck this high? 1, 2, 3, right? Mercs this high 3 to fucking 4 times, right? So when we trade up here again, this time it's not required to take this. We done been here so many times, it's not required to take that now. It's going to use a lower PO3 number. Now you're in a 9 high, and you can trade based on the 9. It's easy. Find a PD array. Go do your thing. And that's it, my guy. That's it for this video, you know? Whew. I know. That was a fucking movie, wasn't it? But I appreciate you guys. And like I said, this is for people who really want to get this down, who really want to talk about it. Let me know in the comments like what kind of trouble that you might have or things that you want to learn about. And come join the damn Discord. You want information? It's over there. And it's a fun time, honestly. I mean, it's a great community of students. Everybody's really getting to that point where now I talk a lot about control in the marketplace. Be in control. You want to be around like-minded traders that trade the same way you do and don't get stuck in that retail perspective of, oh, you can only make but so much in a year, or you can only make a certain percent of your account without, you know, fuck it. Come around some people who have a better idea about how to run through the marketplace, how to really come in and max out without really doing much guessing. The market is not random, therefore we're not going to trade like it is. Okay? So, till next time, I'll see you guys in the next video. All right?